SBI delivered its result on what many would say was a tough day for the Bank Nifty, but the stock outperformed. It finished the day in the green at 207. Today we've seen solid follow-through action on SBI. It's at 217 as we speak. And obviously the brokerage upgrades are pouring in. So let's take a look at those and what exactly each one has to say about SBI's most recent performance and what exactly they like about it. So let's begin with CLSA, and this is an important one to begin with because just a couple months ago they put out a note on SBI titled SBI 5 Reasons to Buy, in which they gave a target of 300 rupees. Now this is the second note and a follow-on note to that, and what's interesting is the target price has only been further hiked by another 10%. So what you're seeing is a 330 rupee target price now from CLSA on this one. They reiterate their buy with an increased target price. Asset quality in their views holding up much better than expected. So everyone thought the moratorium numbers were going to be horrible for SBI, PSU lender, largest exposure. You know, they'll probably have the most pain. They need to provide a lot. They have a legacy of, you know, NPA issues. But they've just surprised everyone with really low moratorium figures, really good NPA situation, lower provisioning this quarter. Provisions came from 13,000 to 10,000. And on the back of that, CLSA is saying the asset quality is much better than a lot of the other peers out there. They've also grown their NII and their core PPP very well, which is your pre-provisioning operating profit. All that is perfectly fine. ROEs of 11 to 12% for a bank like this, with this kind of cheap valuation, is really deep value in their view. You can't go wrong. Then you have Goldman Sachs with a 300 rupee target. Q2 was an operational beat on strong balance sheet improvement. So not just growth and profitability, but improving the quality of the balance sheet is what Goldman wants to flag off. They also like that the PCR is a very high 88% total, and particularly on the stressed loans, the PCR is at 65. They seem to feel that that's more than adequate. You then have a JP Morgan, which is a bit different from CLSA and Goldman because it's got a lower price target. So 270 rupees, which from here today implies around a 25 to 30% upside. But nonetheless, that's still a lot of upside, right? They maintain overweight target, like I said, 270 rupees per share. Strong show across the board is the main reason cited. Asset quality guidance is a positive. So SBI also gave a lot of good guidance on credit cost in that they don't see a material rise in the credit cost. And that's something that JP Morgan has caught on to, and they're reiterating in their note. They also see the NIMs, which are currently stable at 3.37, only maintaining that stability or improving from here on out because the cost of funds is dropping significantly for SBI. So these are the three brokerage views that came in today. The stock is currently up 5%, leading the Bank Nifty and leading the Nifty stocks today. So everyone quite upbeat on this large PSU lender, on the largest PSU lender post the Q2 numbers.